Hello everybody, it's Saturday, July 10th. I decided to do a video report this weekend as opposed to a more written article with static charts. I think I can get a lot more information across in a quick video covering several different charts here. So anyways, let's jump in here. We've got the gold 60-minute chart. Now what I just want to show here is if we look at gold over I'll just go to a 2-hour chart. What I'm looking at and what I've pointed out a while ago when gold was making these new highs over here, I was showing that how they kept getting stepped on with some pretty big selling volume, and I was warning that we're going to see a sharp decline, and that's what we ended up seeing. But what I was seeing is when the market was making these new highs, when gold was jumping to new highs here, the on-balance volume, while the price action was moving up, we saw the on-balance volume for futures relatively flat. If not, they were actually headed down while the market was headed up in this time, and that's very bearish, and that's one of the reasons why I was saying it's getting overextended. There isn't any support here. It's going to eventually drop and fall somewhere into the middle of the range for support, and that's what we've seen now. So if we zoom into the 60-minute chart, this is the sell-off that we saw a week and a half ago, 2 weeks ago, and now gold's trying to bottom by forming this reverse head and shoulders. Here's the head, here's the other shoulder, and we've got this neckline right across here, which was broken on Friday. And if we take a look at the on-balance volume and zoom in a bit, we can see it's I'll stretch this up a little. You can see that more or less we have this shoulder, and we saw the spike low on the on-balance volume right over here, and then we had this head which formed down here, and we saw the on-balance volume would drop even more, and then we saw another quick sell-off here to form the right shoulder, and now we're seeing we had this neckline break, and we actually saw the on-balance volume show that we've broken through this resistance level here, and now we're above that. And if we take a look using this other shoulder here, it coincides with where we're trading right now. We're straight across trading at this right shoulder level, and it makes sense because we're trading right under this key resistance level. If this level is broken and when there's some good volume behind it, we're going to see the on-balance volume break above here. We're going to see the price pop above, and we're going to see it most likely run to where the next level of the next area of resistance where a lot of volume traded, which is right along where this on-balance volume shows where a lot of volume traded. So we're probably looking at a rise up here on the on-balance volume, and if we coincide that with where the price action is, we're looking at finding resistance somewhere right through this area. Possibly might go to the lows here. So we're looking at a possible 30 probably about a $25-$35 move up, depending where it is here, if this level is broken. So that's what I'm seeing for gold. Really what it's doing is it's just slowly shifting its momentum from a downtrend, from distribution, which you could see in these heavy volume spikes, which are declining, and we're just seeing the momentum slowly shift, and it's probably going to head back up and end up trading right through this, right to this resistance level, which is all this noise. In the middle of all the noise is where you're going to find key resistance. A lot of times people actually use the bottoms, the previous bottom, as a resistance level, but what I've found over the years is right through the heart of all the noise is where the average contracts have been traded, and that's where you find the best entry points for short positions or support when you're in long positions. And what happens is a lot of people will end up, say if somebody was to short it, they would short it at this low here hoping it's going to go down, but really it'll pop and push a little higher, shake a lot of people out, and it'll go right into the middle of the resistance, and then that's where everybody really starts to short it. The big guys and a lot of average shareholders own it there, and that's when you get the actual drop. I'm not saying gold's going to drop here, but I'm just showing that key resistance is usually through the noise, through the middle, not just the tops and the bottoms. You want it to actually kind of, in support, you want it to come right down into the middle here. It'll find lots of support. You'll see momentum start to shift, and then eventually it'll head back up. So that's just what I see in gold. I'll just point out the US dollar here real quick. US dollar is doing fairly similar action to what gold is. It's well, it's trending down, and what we're seeing is it's forming this. It's still under in a serious downtrend here in a declining channel, but the price is slowly getting wedged in like a wedge here, and then you see eventually it'll shake people out, and then it'll bounce to a support level. And this is what we're kind of seeing here. We're getting this wedge forming, and it looks like yesterday it's starting to actually have the momentum start to shift up. So we might see a pop to the top here, which is 85, and if it breaks that, then we're going to see it probably move right to the next major resistance level, which is 86. And of course, if the US dollar moves up, we're most likely going to see downward pressure on stocks. We're going to see downward pressure on oil, and it'll also put some downward pressure on gold. But this play could take a while to pan out. We'll have to see. It's important to keep your eye on the price of the US dollar. But right now it's still in a downtrend on the 60-minute chart, but it is starting to look like it's just grinding and getting squeezed into a wedge, and we're going to see some type of relief pop in the US dollar, and I think that is going to put a damper on the markets. So now if we take a look at the SP 500, now thinking about if the dollar does start to bounce here, we're going to see downward pressure on the SP 500. So if we see that, SP 500 is actually trading pretty much right through the middle of this noise. We are in a downtrend, and we just had a couple very strong moves up this past week. Very strong week. This market's overbought. Market internals are telling us that we're overbought, and we're at a key resistance level. And of course we see volume rising as the price was dropping, which is confirming we are in a downtrend. People are in control, sellers are in control, and we saw a fairly light volume, or lighter volume, on this move up, and that's bearish, and we're trading at resistance. So thinking about the US dollar, if the US dollar starts to rally, we're going to see downward pressure on some stocks, and it works out to be pretty good timing, I think, with what's going on. Now if we zoom into the 60-minute chart, here's a 60-minute chart of the SP 500. You can see we're trading right into this congestion area that was formed a couple weeks ago, and we're right at that level. You can see selling volume as the market came down. We saw tons of selling, and now we're seeing this this bounce into resistance, and volume on average is much lighter than the selling. So this is somewhat bearish, and we got to be very cautious about that. We're going to keep an eye on the on-balance volume. If we actually zoom in to this previous, this was the previous rally we saw, and what we saw these new highs kept forming, and the trend was moving up, prices were moving up, but we saw on-balance volume dropping, and then from there the SP dropped quite substantially for 12 days, I think it was. And now what we're seeing, and we saw last week, is this low and this low are higher, so we're starting to get an upward movement on the on-balance volume. The S&P was actually drifting down, still making new lows, while the on-balance volume shows that people were slowly accumulating, and volume was drying up on this push down, which means sellers are getting exhausted. And of course now we've seen a nice move up. On-balance volume is moving up, and we're in resistance, so we're going to keep our eyes on what's going on with the volume. It looks like we're in a pretty good area to short, but we don't want to jump in front of a train right now. The markets are still holding up pretty strong. There's a pretty broad-based rally last week, and you don't want to jump in front of that until you see some divergences and see some good setups for shorting. If we take a quick look at the market internals, this is the NYSE advanced decline line. Pretty much every time the NYSE stocks have over 1,750 or 2,000 stocks advancing, usually we get some type of market pullback. And of course we've been seeing prices kind of get wedged up here, and this is considered overbought area, all these spikes. And every time we get these spikes, we see the market usually pull back. So the fact that this has been grinding up higher for a while, I think we could get a really sharp snapback, and I'm looking to short the market this coming week if we get a proper setup in price and volume action and market internals favor that. So that's what I see for the markets, and we'll just take it one bar at a time. Talk to you later. Bye bye.